Welcome to the Deep Dive, where we sift through the sources to bring you the insights that truly matter. And today, we're diving into a headline that might genuinely surprise you. In a retail landscape that's often, well, facing some serious economic headwinds, Best Buy just reported its highest comparable sales growth in 3 years for Q2 FY26. It makes you wonder, how exactly did they pull that off?
It's a fantastic question, and what's particularly interesting here is that Best Buy isn't just, surviving. They're showing some remarkable strategic agility in a market where, frankly, many are struggling.
Absolutely. Our goal today is to go beyond just the raw numbers from their second quarter of fiscal 2026 earnings call and the press release. We're looking to uncover the real strategies and innovations driving this success. From specific product wins to ambitious new partnerships, even some smart behind-the-scenes operational shifts, we want to understand how Best Buy is truly navigating this evolving tech retail world, and crucially, what all of this means for you, our listener, as a consumer. Let's unpack this. So let's kick things off with a Q2 snapshot, because the numbers themselves were definitely, well, better than expected. Best Buy reported $9.4 billion in revenue.
Yep.
An adjusted operating income rate of 3.9%, which measures their core profitability before interest and taxes, and adjusted earnings per share of $1.28. But the real headline grabber for me is that 1.6% comparable sales growth. That's sales from stores open at least a year, right?
Yeah.
So it strips out the noise of new openings or closures, gives us a true apples-to-apples comparison, and it's their highest in 3 years. What's the secret sauce behind that, really?
That growth is quite impressive, yeah. Especially when you put it in context, the broader retail environment. The company points to a powerful mix: embracing new tech innovation, a relentless focus on creating a seamless omni-channel customer experience, and significantly very strong vendor partnerships. And it wasn't just domestic. Enterprise revenue increased 1.6% overall. Domestic comparable online sales specifically saw a healthy 5.1% increase.
Oh, wow.
This really signals, a robust performance across multiple touch points. It shows their strategy is hitting across the board.
That's great to hear about the online growth, too, but not every category is performing equally, is it? Where exactly is this momentum coming from, and where are they seeing maybe some challenges?
You're right. It's a very selective growth pattern. The big drivers were clearly gaming, computing, mobile phones, wearables, and headphones. Gaming, particularly, saw a massive boost, largely due to that very successful Switch 2 release.
All right, the Switch 2.
And it's not just about a new console hitting the shelves. It highlights how Best Buy's physical presence and sort of event-driven marketing, like those midnight openings, can still create destination shopping, even now. That's a key differentiator against the online-only players. They saw strong console sales, plus peripherals, software, and even noted growth in other handheld gaming and, interestingly, augmented reality glasses.
AR glasses too, okay.
Yeah, and computing. 6th consecutive quarter of sales growth.
6th, wow.
And Q2 saw their highest laptop unit sales in 15 years, remarkably across all price points too. On the flip side, categories like home theater, appliances, tablets, they were lapping a strong iPad launch last year, remember? And drones, all those face declines.
Okay, so definitely a mixed bag category-wise, but strong where it counts for new tech.
Yeah.
Sounds like they're really capitalizing on specific tech cycles and consumer needs. And speaking of consumers, how has customer behavior evolved? Are people spending differently with, the economy?
Customer behavior, it remains resilient, but it's also highly deal-focused. We saw events like Black Friday in July being particularly attractive. What's fascinating, though, is their willingness to spend on high price point products, but really only when there's a clear need or some compelling new technology innovation.
Like the new AI laptops or the Switch 2.
Exactly. Think about that new AI-powered laptop or the latest gaming console. This strategy seems to be paying off. Best Buy reported a year-over-year increase in their Net Promoter Score. That's a key metric for customer loyalty. Shows more people are likely to recommend them.
That's always good to see.
And internally, they're seeing positive signs, too. Lowest employee turnover in 10 years.
That's a great sign. Healthy internal culture. Strong customer focus. And speaking of external pressures, tariffs. That's been a big concern for retailers. How did Best Buy manage those in Q2?
Yeah, tariffs. The impacts in Q2 were pretty much in line with what they expected, didn't materially affect their financial results. Their approach is quite pragmatic.
Yeah.
Deliver the right product assortments for customer needs and budgets, and lean heavily on those strong vendor partnerships.
Right.
It's crucial to remember Best Buy directly imports only about 2% to 3% of what they actually sell.
Oh, that low.
Yeah. This low direct import rate is like a strategic firewall. It insulates Best Buy more than maybe some competitors from direct tariff shocks, turns a potential vulnerability into a bit of a competitive advantage. Vendors use various mitigation strategies, manufacturing flexibility, cost negotiations, diversifying countries, adjusting assortments. Price adjustments are really a last resort.
Makes sense.
So while the blended effective tariff rate they face is around 16%, these vendor actions keep the actual cost adjustments materially lower for Best Buy.
So that low direct import rate gives them a significant buffer.
That makes a lot of sense. Okay, stepping back from the numbers for a second, let's look at the bigger picture. What's driving their strategic shifts? Let's start with their top priority for this fiscal year.
Priority one is all about driving omni-channel experiences that truly resonate with customers. And deep vendor collaboration is absolutely at the heart of it.
Okay, and among those partnerships, the meta collaboration with the AI glasses, that really stood out. What's the strategy behind expanding that?
Well, what's fascinating there is expanding those Meta AI glasses, the Ray-Ban, the Oakley ones, to all stores. They're creating these immersive showcase areas with expert support in over 50 locations. Best Buy is clearly positioning these as, highly giftable holiday products, leveraging their physical space, not just for selling, but for discovery, hands-on demos. That's crucial for new tech.
Yeah, you need to try that stuff on. And on the gaming front, we talked about Switch 2 being a huge success, but the pre-launch efforts were pretty extensive too, right? It wasn't just putting it on shelves. Exactly. They doubled their Switch merchandising space in all stores ahead of the launch. And Nintendo even invested in game trucks, physical trailers at select Best Buy locations. Let fans demo the new system, the latest games.
Oh, cool.
Yeah, that kind of experiential marketing really drove both customer and actually employee enthusiasm too. It just shows the enduring power of a physical retail event.
I can imagine the buzz around those. And computing, especially with AI capabilities, seems like a massive focus area.
Indeed. Best Buy now offers, get this, 125 models of laptops and desktops with enhanced AI capabilities, like Microsoft's Copilot Plus.
Right, the AI assistant stuff.
Exactly. An AI assistant enhancing productivity on these new devices. Nearly 70% of these models are retail exclusive to Best Buy, and they especially trained 16,000 experts to help customers explore these new features, understand the benefits. It really makes you wonder how well they're setting themselves up for these broader industry shifts coming down the line.
And one massive shift is just around the corner, right? The end of support for Windows 10 in October. That sounds like a pretty significant opportunity for Best Buy.
Oh, absolutely. Microsoft ending support for Windows 10 means customers will need to upgrade to new Windows 11 devices, which often require more powerful processing capabilities to really leverage the new features. Best Buy's strategy is comprehensive. Personalized marketing, targeted promotions, lots of store associate training, and, crucially, their Geek Squad services. Think repair-to-upgrade options, data transfer, setup help, plus trade-in programs for the older devices. It's a classic example of them leveraging their whole ecosystem to capture an upgrade cycle.
Smart. They're also evolving how they handle mobile phones.
Yeah.
What's this new operating model with Verizon and AT&T all about?
They're expanding a new model that lets their expert salespeople directly tap into the carrier system.
Okay.
It just streamlines the whole process, leads to a much better customer experience, and importantly, higher sales growth for mobile phones, a category that's seen growth after years of decline. It's all about making those complex transactions, like setting up a new phone plan, feel seamless for the customer.
And another bold move I saw was the IKEA pilot. That partnership is really innovative. 1,000 square feet inside Best Buy. Is that really enough to capture the IKEA vibe? Or is it more about generating leads for Best Buy appliances within a sort of new customer segment?
That's a great question, the intent behind it. It's definitely an innovative partnership, piloting these 1,000 square foot areas in 10 Florida and Texas stores, showcasing IKEA kitchen and laundry settings naturally with Best Buy appliances integrated. 2 of these spots will even serve as IKEA pickup points. This is actually the first time IKEA products will be available through another U.S. retailer. I think it's probably less about a full IKEA experience and more about meeting customers where they are, offering a convenient, curated inspiration point for home projects, leverages Best Buy's existing foot traffic and appliance expertise in a totally new way, and gives IKEA new reach.
That makes a lot of sense. This all really underscores the power of physical space and collaboration. They specifically mentioned vendor labor investment increasing too, right?
Yes, vendor labor investment is expected to be 20% higher in the second half of the year. This absolutely underscores the significant value vendors see in Best Buy's relevant customer traffic, their unique expert sales and service model, and that crucial physical space for live interactions. For complex products, being able to see, touch, get expert advice, it remains invaluable.
Okay, moving on to priority 2, building and scaling new profit streams. The Best Buy Marketplace just launched. How big of a deal is this, and what does it actually mean for customers?
This is a major development, yeah. The marketplace offers, quote, 6 times more products available online from big names and new vendors. For you, the customer, this just means a massively expanded selection. Think personalized gaming setups, custom controllers, chairs, keyboards, a tripled assortment of mobile phone accessories, and even entirely new categories like Fanatic sports merchandise and karate cookware.
Wow, cookware. Okay, so it's not just more tech, but a broader range of products entirely. And how are they making it easier to find stuff with so much more available?
They're testing a new AI search feature. It's set to roll out by the holidays. It uses helpful prompts and a see more like this option to guide customers, cut through that vast new selection. What's particularly clever is how the physical stores still play a key role. Customers can return most marketplace purchases right in the store.
That's handy.
And their Blue Shirt associates use an app to help customers find products from all sellers, marketplace included. It connects the online expansion with their in-store strengths. Financially, it's expected to have a positive impact on their operating income rate long term, even with startup costs and, some initial cannibalization of their own first-party sales.
And they're also expanding Best Buy ads, right? That's
Yeah.
another interesting profit play.
That's their other significant new profit stream. They ran their largest ad campaign ever, AI that, designed to raise awareness for AI benefits. Apparently very successful across impressions, clicks, and units sold. They're expanding into new areas too, like working directly with agencies and demand-side platforms, DSPs, those are the ad tech companies automating ad buying, and non-endemic advertising relationships. That means placing ads for companies not traditionally linked with consumer electronics, broadening their revenue base significantly. This growth in ad collections is expected to benefit their gross profit rate, though the operating income rate impact will likely stay neutral for now due to ongoing investments in the tech and talent needed to run it.
So, growth, but also smart investment. That leads us neatly into priority 3, driving efficiencies and cost reductions. How are they achieving this without, cutting corners?
Yeah, this is an ongoing focus for them, always looking for smarter ways to operate. One major area is supply chain modernization. They're implementing a new data-driven sourcing solution. Chooses the most efficient location to fulfill online orders. In Q2, 40% of all online orders already use this new model. Led to cost savings, improved on-time delivery. Their goal is 100% by early FY26.
40% already, okay. And a new partnership with FedEx sounds like a big change in their carrier strategy. How does that impact the customer?
It is a big change. FedEx is now their primary national parcel carrier. This partnership enables real-time tracking data right in customer communications. Should significantly reduce support calls, cancellations, reship costs for Best Buy. For you, the customer, it means more transparency and probably faster service. It also lets them expand national shipping, including Sunday deliveries now.
Sunday delivery was big.
Yeah. They're also using more automation in their distribution centers, automated guided vehicles, AGVs, basically robots moving inventory around to optimize warehouse flow and storage.
And they're not afraid to cut initiatives that aren't performing, like that Care at Home Best Buy Health program. That seems like a clear move to focus resources.
Precisely. It reflects a disciplined strategic decision. Exit non-performing initiatives, reallocate resources where they can get better returns, align with core strengths. That's a sign of a company strategically, pruning for long-term health.
Okay, let's look ahead then. What's their market share position looking like right now, and how are they feeling about it?
Best Buy acknowledged a flattish share overall in Q2. Now, that might sound modest,
Yeah.
but in a volatile market where many are losing ground, just holding steady is actually a win. They see it as a slight improvement, indicating they are positioned on the front foot for a long game strategy. It's a quiet victory, maybe, but a victory.
And the Q3 outlook, are they expecting this momentum to just keep rolling, or are there any seasonal dips they're anticipating?
They expect Q3 comparable sales growth to be similar to Q2. While gaming growth should continue, it probably won't be quite as strong as that Q2 surge from the Switch 2 launch. They do anticipate better iPad performance, continued mobile phone growth. However, they also expect a slowdown heading into October. Customers typically wait for the big holiday deals then.
Ah, the pre-holiday lull.
Exactly. It's the classic valleys between events phenomenon. Consumers hold off on purchases, anticipating promotions.
That brings up a good point about sales versus profitability. You mentioned they're trending towards the higher end of sales guidance, but keeping the original operating income rate guidance. Why the disconnect? If sales are up, shouldn't profit be too?
That's a crucial nuance, yeah. It comes down to the mix of products being sold. The higher sales are coming more from lower margin categories like gaming and computing. That impacts their gross profit rate, the revenue left after the cost of goods sold. So while top-line sales are stronger, the product mix means overall profitability isn't accelerating at quite the same pace. They're carefully balancing volume with margin.
Okay, that makes sense. What about those challenge categories we talk about, like home theater and appliances? Is Best Buy just accepting this, or do they have a plan to turn those around?
They are definitely addressing them, yeah. For home theater, they acknowledge a softer trend, a clear shift to value. So they're modifying assortments, focusing on price, enhancing the in-store experience, expanding relationships with brands like TCL, Hisense for mini LED, LG for OLED screens, offering more compelling choices there.
And appliances.
Appliances are in what they call a duress market, meaning people are buying out of immediate necessity fridge breaks, washer dies, rather than for a planned renovation. Because of the softer housing market, Best Buy needs to modify assortment and placement to offer faster fulfillment or immediate take-home options, cater to those urgent needs.
The emergency purchase. The upgrade cycle for tech products is always fascinating. What's the momentum looking like there? Especially for consumers thinking about new purchases.
The upgrade cycle, it varies a lot by product, of course. They see momentum building in computing, driven by people replacing those pandemic-era devices.
Yeah, those are getting old now.
Right. Ongoing MacBook upgrades, too. And now, these exciting new AI features providing another reason. Gaming, naturally, is very launch-dependent. Best Buy really thrives when there's a combination of genuine innovation and replacement needs hitting at the same time. So for you, the consumer, the more compelling the new tech, the better for their business, because it incentivizes those upgrades.
And finally, how does the broader housing market impact Best Buy, especially with all the talk about potentially easing interest rates?
The strongest correlation with the housing market for Best Buy is definitely in major appliances. And easing in interest rates could significantly shift that market, move away from those duress purchases we mentioned, the immediate necessity buys, towards more planned remodels and new home purchases. This would profoundly benefit Best Buy, given their broad and dedicated appliance offerings, moving from urgent fixes to more strategic, larger ticket investments.
Okay, so to sort of bring all this together, Best Buy's Q2 performance really demonstrates that despite all the economic uncertainty, a clear focus on tech innovation, that seamless omni-channel journey, and strategic vendor partnerships can truly drive significant results. They're not just selling products, it seems. They're creating experiences and leveraging their unique assets to stay relevant. It's a compelling story of adaptation, really.
Absolutely. This deep dive paints a picture of a retailer adapting strategically, playing to its strengths in a dynamic environment rather than just reacting to headwinds. It really challenges that simple notion that everything is just going to move online.
And that leads us perfectly to a provocative thought for you, our listener, to consider. In a world increasingly dominated by online shopping, Best Buy is doubling down on its physical stores, expert advice, and deep vendor relationships. What does this deep dive suggest about the enduring value of in-person experiences and specialized knowledge, especially in retailing complex products? And what implications might this have for other industries reliant on customer interaction?
The human element, yeah. The ability to touch, see, get expert guidance clearly still holds immense value for certain types of purchases. It's a good reminder that not everything can be completely commoditized and sold purely online.
Exactly. So maybe for you, consider your own recent tech purchases. What factors ultimately influenced your decision? Was it a great deal online? Was it the expert advice you got in a store? The ability to actually see and touch a product? Or just a super seamless online experience? Think about what truly tipped the scales for you. That's all for this deep dive. Thanks for joining us.